Good afternoon, everyone. We're joined here by Peter Maletis, portfolio manager of Merk Investments, responsible for the ASA Gold and Precious Metals Fund. How are you, Peter?
Doing great today.
Well, thank you very much for participating in 3L's inaugural webinar. Really appreciate that. Peter, before we jump into today's topic and fireside chat, something that's very sensitive amongst portfolio managers is obviously performance. We've got the overall commodity price trending in the right directions, but the equities aren't performing in correlation with the performance of the overall gold price. Why don't you touch on how your performance has been year to date and maybe how performance has been trending over the last 6 months?
2023 was a relatively challenging year, despite a supportive gold price. The gold price was relatively flat over that time frame, but the equities significantly underperformed on a relative basis. A lot of that was driven by the central bank buying of gold, physical gold, which offset the ETF outflows, which was record levels. I think we also saw by the end of the year, companies were actually having some of their worst guidance and financial years that we've seen to close out the year. Fourth quarter numbers across the board, regardless of the segment, were pretty weak. Not only the large cap producers, but the royalty companies, the mid cap producers, and the exploration and development companies all had challenges. No segment was immune to kind of the year-end doldrums. And so then the guidance came for early in 2024, which also kind of shocked a lot of people. We continue to see some inflation that was causing margin compression. And thus, the gold price continued to do well, but the equities underperformed. I think we're sort of seeing a rebound in that as the gold price has rallied. But I think that's something we're anticipating that should drive equity performance going forward.
You've got the macro going the right way. Even if equities start to perform properly, you've got to have the right portfolio mix, if you will. What percentage of your portfolio is in North America, Latin America versus rest of the world?
So in Latin America, I'd say roughly 30 to 35% is we're invested there. And then I include Mexico in that. In terms of North America, we're roughly 20%. And then I'd say the rest of the world is between Asia, Africa, and Australia, roughly 50%.
Our next question, Peter, is always one that I'm always a little hesitant to ask because, if we all had a crystal ball, we probably wouldn't be, working or doing this job. But over the last 12 months, gold is trending in the right direction, above US $2,000 an ounce now. The ratio on silver seems to be improving, and copper is now above $4. Where do you see these prices going in 2024? And what do you think will drive these changes?
We entered 2023 kind of under the impression that the Fed would eventually start cutting rates, or at least intimating that they would be. We didn't see that, but the gold price held in pretty well. I think the primary driver of that was the central bank buying. The Chinese in particular were buying a lot of physical gold, while we saw significant outflows in the ETFs. We look at that constantly, and we believe that as there is a shift in sentiment towards the gold price from the generalist investor, we'll see inflows of the ETFs. I think that could be a good driver for the gold equities in terms of inflating the gold price. We also have the Fed, which is still holding on to the higher for longer sort of framework for interest rates. We believe that they will have to start cutting rates at some point over the next 6 to 12 months. And that will be the primary driver of gold increase, which will also drive equities higher. And then finally, the dollar will continue to, we believe is weak, will continue to weaken as we move forward with the Chinese and other central banks globally looking to essentially de-dollarize their economy and shift into other currencies. So gold is that driver, initial driver for those economies.
Thank you for that. You touched on something which both yourself and myself, being in the commodity equity business, was, here's what's going to drive the macro commodity price, but the equities, as you know, haven't participated in the move. What do you think the reason for the real disconnect has been recently between the commodity price versus the performance of the commodity equities?
ETFs flows is primarily a North American driven investment sort of thesis. And I'd say the general investor in North America and Western world really has avoided the gold trade. They don't believe, they're short term in the way they're looking at it, and they are not investing in gold, nor are they investing in the equities. So what you have is the Chinese, who are longer term and have other motivations for buying gold, are supporting the gold price, but really don't have an interest in the gold equities. And so once we see that change of the generalist investor, or even some of the precious metals funds, that will drive the gold equities. We also will see, hopefully, the gold price. I think we do need to see the gold price increase even further for the generalist investor to get involved.
Yeah, I completely agree. And also hopefully that leads to a increase the flow of funds, which we know we all want to see. I've known you for 15 years plus. I kind of know the answer to my next question, but for those in the webinar that are listening, what criteria do you look for in a company that determines a good investment candidate for you? I've heard different answers. Some people go with the asset first, management second, because you can always change the management team. Others go with management first, asset second, because a quality management team can usually take a mediocre asset and make it better. At ASA, what do you look for in a company to determine if it's a good investment candidate for you?
Those two are the top two. We have it's between assets and management, but I'd say management is probably the most important, because they're the ones that actually can take somewhat marginal assets and make them better that have been in the wrong hands prior to that. But asset quality is always very important, and if you can find a good asset, you kind of latch onto that, and then you stick with it, while management teams kind of ebb and flow and change the asset for the better. So those are the top two. Jurisdiction is always important. It's part of the rubric of what we look at. So there are certain places we won't invest, but for the most part, I'm willing to take some geopolitical risk for asset quality.
And how long do you usually hold your positions for? Like, I don't know. I'm sure you don't have a minimum or a maximum time, but in general, for the audience, how long do you tend to hold your positions?
Yeah, I mean, it depends on the stage and when we're investing, and so, but the earlier stage stuff, there's been names that you and I have been involved in for 5 years now. I mean, I've been managing ASA for a little over, or almost exactly 5 years, and I'd say that there were some investments we made in late 2019 that we're still in. So it just depends on the quality and how we feel things are going, but we do take a long-term approach. It's not a one year time frame. It's 3 to 5 probably.
I mentioned copper at above $4, and that seems to be the red metal starting to become, very topical, and what everybody's kind of starting to look towards. What other commodities outside of the precious metals are you personally bullish on? We've obviously got the EV trade also happening in the background too. What other commodities do you like outside of precious metals?
I think medium to long term, I think almost all the commodities are investable, and I think I have a positive view on all of them. I don't spend a ton of time looking at them because, it's not our mandate. But if a good asset or a good management team comes along, we'll definitely look at it. So, I mean, I actually think lithium here, medium to long term actually looks really good. If you can find the good assets and the good management team early, you'll end up having a winner. Copper's going to be there all along. Again, I don't have a preference for any specific commodity. I'd say it's more asset quality management if I look outside the precious metal space.
It's going to be interesting to see in 2024. There hasn't been a lot of pure play like battery metals or critical metal funds yet. So it'll be interesting to see how the landscape changes in the next 12 months when it comes to
yeah, no, and I agree. And when I'm looking, even when I'm looking at the precious metal side, the earlier you invest, you take the commodity risk somewhat out of the story. So, you have non-commodity specific catalysts for the early stage names that help drive equity performance. And so that's where a lot of people, when you can invest in the sizes of companies that we do, you have that sort of edge. And so I'd say some of the non-precious investments we've made have been management and asset specific, and they're early stage, where we see a management team particularly that can drive these stories forward with catalysts. I guess one of the things we also kind of look at is we like to get a little bit early before the larger institutions. So we've kind of phrased it as institutionalizing a name and getting it up to speed, where there's some founders, some guys behind this story that are really good, that we like, that we know they'll help push it forward. We get in there before the larger fund management complexes do, and we kind of rationalize it and get it to a point where they feel comfortable investing in it. And that is the next catalyst where the capital, the larger capital that even ASA is not capable of funding, you need these large names to be able to take it to the next step. But I think, our network between yourself and ASA, my partner Jamie and I, we talk to everyone and get them involved. And that's how we get them to take these companies to the next level.
Let's spend a minute on that. There's been a couple of years where you've single-handedly held up a lot of small cap companies when it comes to financing them. Capital's been really hard to secure for the junior explorers and miners, as you know. There's only enough money to go around, and everybody's kind of looking for capital to move their projects forward. How do you see this evolving in 2024? Let's assume the macro continues, we get some flow of funds. How will the funds be deployed into the companies? Do you think the portfolio manager will take a safer approach, kind of start with our seniors that are more liquid and work their way down to the smaller caps? And then, or what kind of financing strategies? We've seen a lot of converts now, stuff that we never used to see in the past. What do you think is going to happen when it comes to the flow of funds when portfolio managers go to deploy in 2024? Which should be a good year, and what kind of financing strategies do you think we see in 2024?
We invested in a lot of small cap names, and we took sort of, I won't say a shotgun approach, but we like to call it a venture capital approach, where we don't expect all the companies to be successful. 4 or 5 years ago, we had a lot more capital deployed as we transitioned the portfolio from a large cap portfolio to a smaller cap portfolio. The discussions are a lot harder right now because the amount of money that we can put to work is not as great, and so it's a little more challenging. So I agree with you. I think that the royalty and streaming companies are being, more aggressive. I think, as a portfolio manager in equities, I'd prefer not to have those types of royalties or streams on our assets because it takes away some of the leverage. But in this environment, you need to take all the money you can get. They've also been a lot more creative where they're adding equity as well. And so at certain stages, it's the right call. We've definitely been looking at some convertibles as well. The thing that's going to propel everything is when we get the generalist investor flows into the large cap open-end funds and flows just from the generalist investor into the precious metal space, where we'll see deals that are being done that will help fund the next stages of growth for these companies.
My next few questions are more around jurisdictional risk. I touched on Mother Nature sometimes put these minerals in, we can't control where they are, and then some of these minerals are located in some very challenging jurisdictions. When it comes to jurisdictional risks and evaluating new investment ideas, I'd love for you to touch on how you and your partner Jamie deal with that internally. We've obviously got, wars going on and some internal wars in countries that maybe some Western world people aren't even aware of. How do you evaluate jurisdictional risk when it comes to new investment ideas?
Geopolitical risk is always very challenging, and governments change a lot. And so there will be ebbs and flows of how certain countries react to permitting and nationalization of different assets. If you'd asked me 2 years ago, West Africa was looking great. Right now, it's really challenging. Certain countries are all right, but some of the countries that we've been comfortable with in the past are really challenging. Latin America has been challenging as well. Mexico and Chile, have struggled a bit with getting permitting. It's one of those things where you just got to do it on a case-by-case basis. You also have to, the core is the management team and their relationships within the countries. If you have the right people, things can get done as long as they're doing it the right way. And that's part of the due diligence we do. But getting a mine permitted and built in North America and Canada and US actually can take a lot longer. So it's not as simple as looking at certain countries and saying yes or no. You need to understand the region they're in. You got to understand the relationships they have, and hope believe that is the right group that you have involved. I think between Jamie and I, we've done a lot of site visits globally over the last 15 years. And so that's also part of the rubric that we use is, we know a lot of people and we've been to a lot of places. And so we can make some fairly quick decisions around what we will and will not invest in what jurisdiction.
Yeah, so it's funny. I was just talking to somebody recently, and we were talking about South America. And it seems like every year the challenges jump from country to country. One year it's Chile, next year it's Peru, then Argentina, etc. This is a LATAM webinar. So, what countries are the most attractive to you, and why? I guess you touched on permitting, ease of permit. There's obviously quality of asset, but what countries are the most attractive to you in the LATAM region?
Some of our larger investments are in Brazil and Guyana right now. Those are jurisdictions where we feel fairly comfortable. Mexico, we have an election coming up this year. I think a lot of the permitting risk will be more understandable once that happens. There are a lot of companies that are waiting for permits there. I have trouble believing that Mexico is not going to allow open pit mines in the future. So it's just a wait and see. A lot of the companies have become somewhat binary in the outcome of how things are going to act based on whether or not they get a permit. So I'd say, it's Brazil and Guyana right now. We have, Mexico. We have a number of investments there, and I actually think the valuations right now are very cheap. So I think the opportunity is really good there. Outside of that, we have some investments in Bolivia. We have some investments in Peru, Ecuador. They're all okay. It's just a question of how some of the elections go and how the management teams kind of manage the process.
It's funny, I think you said earlier, you take the venture capital and private equity. I think venture capital approach seems like the same with spreading the dollars in different countries. Same thing. They're not all going to work, but when they do work, they hopefully work extremely well. And this question is always a difficult one to ask. Are there any regions that you won't invest in? I like to you tend to use the word challenging, which is a perfect word to be non-offensive, but how do you generalize where you probably won't go currently today? Maybe you'll go there. Never say never, but what regions won't you invest in right now?
Some parts of Asia are off the radar for us, and some parts of Africa are definitely no go. Again, it just depends on the groups in charge, basically who runs the country, and obviously the influence of outside backers can also cause some problems. So I'd say West Africa is getting a lot more challenging. We own stuff there, but I'd say that there's a lot of intrigue with the French backing out there. In Latin America, I mean, again, I'd say for the most part, they are investable, but it's, more of a function of where are the politics at that moment. We have the ebbs and flows, and so they'll, you see it, every new term happens, and somebody with the country will go the other direction of who they'll allow to invest in the permitting. So again, you just have to play it by monitoring the elections, and is evaluation good to take that risk now? Sometimes it is, if the asset's that good.
That's what keeps our job so interesting, right? Like if it was really easy, everybody would be doing it. But mining has a challenge. But when it works well, and it's quite rewarding.
Well, part of the problem also is there's so few of us now, and it seems like it's dwindling the amount of us, and so feeling like I'm one of the older people doing this now is a lot more challenging to think mentally.
We don't know anything else that we can do. Nothing else we know how to do.
Exactly.
Well, I think we've got the Fed in the background this year. We've got an election that we won't get into politics here. We've got a lot of good things, I think, potentially happening where we could have a good 2024-25. So let's keep our fingers crossed, and hopefully, you and I are sitting down 12 months from now, reviewing this tape, and some good things have happened in our industry, in our sector. With that said, Peter, any final insights you'd like to share with investors before we sign off? You
brought up elections and and I mean, there is a big election here up down in the U.S. and I'd say as an American, I can say that it's going to be very interesting to see what happens there, because whoever wins it seems like we'll go in very different directions, and that'll create some opportunities and some positive, negatives globally for our type of investments. So we'll see how that goes, but it's something that we need to pay close attention to, because it's a big driver of global economies. Never a dull moment in our industry. Ladies and gentlemen, that concludes our questions with Peter Maletis from Merk Investments, the portfolio manager for ASA Precious Metals Fund. Peter, thank you for your time, and hopefully we have a great 2024. Thanks, Mark. It's always good talking to you. Looking forward to the future, and I anticipate that 2024 will be a good one for everybody. Thank you.